Let's go for our daily update on business news. Emile Donovan joining us from Wellington. Hi Emile, some welcome news for dairy farmers.
Hi John, yeah that's right. So Fonterra today lifted its forecast payout for the season just ended by 20 cents. So it's going to be $6.75 per kilo of milk solids. That's mainly due to strong global demand, particularly from China. It's also picking an even higher payout next year of $7 a kilo, which will be the fourth highest milk price on record. That, though, was news to some analysts who have a bit more wary a view of the Chinese economy. They're picking it to slow down quite substantially over the next year, and they think Fonterra is being a little bit optimistic, though they're not saying it's beyond the realms of possibility. But either way, it's pretty good news. You know, it'll mean 3 years in a row of prices above $6 a kilo, and according to the economists that we've spoken to, it means that most dairy farms, most Fonterra farms at least, will be cash flow positive. So there you go. Yeah,
that's good news for them. We talked about steel and tube last night, Emile, and you were going to update us. What is the latest?
Well, the latest news is pretty grim, John. It's announced an underlying loss of $38 million in the year to June. That is a bit of a shock, as they were earlier projecting a $31 million gain. Now, we talked about the causes yesterday. We talked about restructuring costs, a bad time for the plastics business, and so on. In addition to that, it's also breached its banking arrangements, so in a bit of a tough spot there, steel and tube. Now, the board is really trying to wash its hands of this now. They've asked the bank to waive the breach. It's looking for a fresh start. It's described these as legacy issues which it's had to clean out, and it does think that it's wiped the slate clean and that some of the measures that it's put in place put them into a better position for the next year. That being said, their share price ended down 18%, so wow. That's not great news for them.
It's not.
And,
no, it's not.
And there is one nasty surprise in the pipeline too. They still don't know what kind of penalty they will face for mislabeling steel mesh. So not quite over the hill yet.
Right, thank you, Emile. We appreciate it. Now, look, this was we were talking about petrol prices last night, and we got a question from Reese Spears, who was a listener or a viewer, and the question from Reese is, can someone explain the correlation between oil and fuel prices? A really good question, Reese. Last time, Reese says, the petrol price was this high 10 years ago. Oil was at $140 a barrel. Currently, the oil price per barrel is approximately $70. How does that work? This will be seriously scary if oil hits its previous high. We could be looking at $4 a litre for 91. Can you explain this? Take it away, Emile Donovan.
So, yeah, I mean, look, it's a really interesting question. It has a really complicated answer, but the boiled down version, courtesy of Mark Stockdale of the AA, is as follows. So the first thing to remember on this is that cars don't burn crude oil, they burn petrol. That, of course, is a byproduct, and so the two are related, but they're not the same thing. So when we're talking about this, we should really be talking about the price of refined fuel. Petrol and diesel, which we would call the commodity price. Now, at the moment, the commodity price for petrol is about $95 a barrel, and 10 years ago, when Reese is talking about, it was a bit above $140. The important thing to keep in mind here is that what you pay at the pump is not just influenced by the commodity price. The actual cost of the petrol only constitutes about a third of what you'd pay at the pump. About half of what you pay is taxes, and the remainder is margins that are tacked on by the petrol companies to make sure they're in the black, and shipping costs. So in the past 10 years, taxes on petrol have gone up lots, and margins have gone up a bit as well. And there have also been 10 years of inflation. There's also been 10 years of inflation, which is pretty much why we're paying more in dollar terms now than when fuel was $140 a barrel. Then you add into that the New Zealand dollar was stronger back then, which means that now we're getting less fuel for every dollar that we pay, and it starts to make a bit more sense. So a good rule of thumb really to follow is that every dollar that the commodity price goes up, the price that you pay at the pump goes up by about 1 cent. So if petrol jumped to $140 a barrel tomorrow, we wouldn't end up paying $4 a barrel, a litre rather. We'd end up paying about $2.70. So it's still a lot, but it's not quite a 1-to-1 ratio.
Nice explanation, Emile. Yeah, it does. Reese, I hope you're happy. Thank you. Good question, Reese, and good answer, Emile. Right, what do the markets do just before we go?
The NZX 50 is down 60 points, that's 0.69%. It ended on 8553. And the dollar's buying 69 US cents, 91.4 Australian and 51.4 pence.
Emile Donovan, thank you very much indeed.